Aloha, big wave trading family. I hope everybody's enjoying their Super Bowl Sunday. I don't think many are going to watch this video lesson, but if you do watch this video lesson, if you're not too hungover from the Super Bowl, I want to make it very clear that everything that I've been talking about the past month plus, just go read the new positions page. Every single post for over a month said that it's not healthy. This is how you lead into big, sharp, nasty pullbacks. Warned against it possibly happening as the week went about. As my stock patterns started to deteriorate in all my long scans, new long positions started to fail more and more, and now more failing than working. And overall, just things look terrible. This is a nasty rollover. Nobody says that we have to crash, but it's kind of perfect setup. We haven't touched the 200-day moving average since November. Haven't touched the 50-day moving average since September. It's ridiculous. No pullbacks, no 5% pullbacks forever. Finally are in the middle of one, and it's nasty. I always tell people that I love to buy pullbacks. Yeah, when they're not falling knives. And now what you have a falling knife. This is the worst time to be buying stocks. I am always looking for a bottom and a reversal. I still have some stocks that are uptrending like VKTX, ERI, Soda, so there's some stocks up there, but those are definitely not the majority. Those are very much the minority. And if you look at the NASDAQ, you look at the New York Stock Exchange, you look at the S&P 500, you look at the Russell 2000, everything is selling off on very strong volume. Dow Jones Industrial Average, let's look at the Dow Jones Transportation Average. It's all the same thing, and it's all happening on very heavy volume. Things do not look good. This is not the time to be a hero. This is not the time to try new long positions in size. I know when to go 20% per one long position. I know when to invest 10% of my capital in new long position. I know when to invest 5%, 2%, 1%, 0.5%. And if you'll notice, during the last part of this rally, outside of when it started in August, when this rally attempt started, it immediately became overbought by October, and from October on, all of my long positions were measured in small each. Most were working, so the signals kept as long as the signals kept triggering, I kept taking them. The majority would work, the not work. But one red flag that I didn't now understand completely, a lot of my speculative long positions that were working earlier in the year in 2017 and working in August, September, and October slowly just were not working. So I started to reduce the amount that I was even investing in those signals. They were still under beta testing, and since they were still triggering, I was still taking them. Hence the most positions I've ever tracked and managed in my life. Well, following this week, they're starting to pull back, and I assume if the selling just goes on for just a couple more percentage points during this upcoming week, I'm going to lose probably half of the long positions I'm tracking because they are ever so close to full sell signals. And that then brings me to my next point. Obey the sell signals on the new positions page. If you're long any of those stocks listed under the 50% sell signal area, you need to move half of those stops to whatever Friday's low a day was, minus 0.01%, so 1 cent below whatever the low a day was on Friday. If you have a 100% sell signal on the new positions page and you are still long that stock that's listed as a 100% sell signal, you need to move your final stop to 1 cent below Friday's low a day. I've moved all my stops up. I've split them up on the stock still uptrending like NEPT. I still have 10 different stops on this one. One here, one here, one there, one there, one there, one there, one there, one there still, and soon one will be removed because the 200-day moving average will go above this low, so that one will be removed and they'll be consolidated higher. But if NEPT violates this low right here, boom, that's a 50% sell signal. It then violates its 50-day moving average on heavy volume. That's going to probably be a 100% sell signal if it loses its green bop. So remember, as these stocks move up, I split up my stops and trim and trail, and as they hit, I consolidate them, and when stocks really start selling off like you see under the 50 and 100% sell signals, I start moving them all up and start consolidating. So I can go from TBBK, for instance, before this day right here, I had about 10 stops on this one. After this day, that's it. There's one final one right there. One stop I don't think triggered. I think it might have been this low right here. I'm not sure. Something happened. So I believe I kept one stop on. Maybe it was this low right here. And then had a final one here. But after that day right there, because it closed below the 20-day moving average on above average volume, 50% got moved there. So then 50% of the trade was here. the final half right there. And that's how we then consolidate stops once they start selling off. So the day before this big red day, 10. After this red day, 1. After the 20-day moving average on heavy volume violation, now 2 again. So it's a constant dynamic fluid process, and by doing this you lock in gains on the way up when the market starts to reverse, and as the Dow Jones sells off 3%, your stops are triggering intraday for gains before others trigger for smaller gains, and then before a few trigger for losses. I will remind everyone, during this past week I did not suffer any large or medium-sized losses whatsoever, not even on the new long positions. They're already very small, 1%, 0.5% of my account capital per position, and then there's always a first initial tight stop. As that goes, then I start adjusting them higher. So there was no serious losses. Was there a drawdown of 5% off the account highs? Yeah. The market's down more than that, so that shows that so far we're doing something right. Dow Jones Industrial Average is down 4%. Russell 2000 down 3.83%. Remember, we're in more high beta stocks. I thought that we were doing better, but I guess not. That's down 4%. So we're not doing too bad. And the hedges, if this market continues to sell off, we will start, I at least, will start to raise more cash as the stops trigger for gains on the majority of the positions, small losses on the rest, and now my hedges will start working. And once my hedges represent more of my account capital per the trades that are on, then we start treating them like long positions, and we start trimming and trailing. We start splitting up stops. But for right now, on all of my hedges that are working, I still have that initial cut loss right here below this low. So keeping all of that in mind, we are still trending above the 50 and 200-day moving averages on all of the indexes except for the Russell 2000. So keep that in mind. As long as that's the case, my market models are just under neutral conditions, even though I believe we could see a crash. Everything lined up. Read the past 20 posts that I put on the new positions page. I talked about sentiment. I talked about bond yields. I've talked about not parabolic moves, which is why I think we could still have another huge leg up possible. There weren't a whole lot of parabolic charts. The market and some charts were starting to get there, but they were climatic runs, but not quite parabolic. So I thought we might have one more swoosh up before this selling off, but with this massive red volume bars, since we started to turn in some of these indexes and ETFs, you need to really heed these big distribution bars after such a strain. Look at the uptrend line on the spider. It broke out in January. This entire move, it's called a blow-off move. And here we are rematching towards it. If I draw this out more, we're coming up to it, which is matching the 50-day moving average. So, keeping that all in mind, I have 3 new long positions, 2 new long positions, and an add signal for Monday. I'm not farting around here. If CTSO breaks below this low on heavy volume, I'm completely out. If it breaks below this low on below average volume while keeping green bop, I'll be out half. But if it moves below this low right here at all, I'm completely out of CTSO. And now, if CTSO looks like it's going to gap below 760 in the morning on Monday, let's say that the bid is 750 and the ask is 755, CTSO is no longer a new long position. The trade is off. So keep that in mind. But for now, I want to get long CTSO. 780, 745 first cut loss level, 720 final cut loss level right there. So it hits 720, I will be completely out of CTSO. But remember, if CTSO indicates an open or gap below 760, there is no trade. HBIO, another extended stock. Wanted to also mention CTSO. New traders, stay away. It's extended ever so slightly, but it's extended, so stay away. HBIO, it's extended, so stay away. It's too risky of a market for new traders to be farting around. Now, if an experienced trader wants to fart around with me and try to catch a huge winner, because remember, the best stocks that hold up when the markets are holding down, let's say that this is all of the selling and on Monday we reverse higher, I guarantee you HBIO and CTSO is going to blast off higher, because look at what their charts look like despite the market pulling back almost 5% with our accounts down, my account down 5% off the ultimate recent highs. They look great. So as long as they look great, I'm going to try them. But once again, my limit order for HBIO at 465, my first cut loss level is right there. It goes below 440, I'm out half. For now only, I have a final emergency stop at 410, 405. But if it closes below here before hitting here, all of my stop is being raised to whatever the new low is, max green bop or not. These things need to move higher immediately or I'm raising stops. And once again, small positions for me. CTSO, 0.5%, only because it's perfect speculator scan quality. So half of it, because it's extended, 0.5. HBIO, similar situation. Perfect speculator quality has to be halved because it's extended. HBIO and CTSO were both confirmed in side scans. Then I want to add to LIVN. LIVN is semi-cancelum quality. Initial long position was here. It's had a couple of shakeouts, but overall it's holding up very well. Increase in BOP, increase in volume, candle over candle. Once again though, it's slightly extended. New traders, stay away. Look at this as educational material, information purposes only kind of video for now. Wait till the market gets better. I know what I'm doing and I understand the odds are that this might fail. But if LIVN, CTSO, and HBIO happens to go 25% on Monday and I didn't take that trade, I'll be pissed at myself because the reward risk ratio is there. However, I also understand the odds of success is low, but I can handle the tiny losses to not miss out on a potential big move if we have seen the lows. We'll see. If the Patriots win the Super Bowl, historically, that's not really good for stock market returns. They really don't correlate with each other, but it's just an interesting side note, just like all the previous data was until it mattered this past week in the stock market. But anyway, when I add to LIVN, 0.5%. It's a cancelum quality stock. It's semi. It's an add signal. It's extended. You know, I'm going to do 0.5% of my account capital on it, but you could get down since it's semi-cancelum quality. That's 1%. It was only in my tertiary scan, so for an add signal, 0.5, extended 0.25. I'll just stick to 0.5 because if I get long at 85.72, my first cut loss right there, 84.30. Trips below 84.30, I'm out half. Trips below 81.98, I'm out all of it. And once again, just like with CTSO, if HBIO has a bid ask and indicates an open below 440, if the bid's like at 420 and the ask is like 435, trade is off. If LIVN has a bid and ask below 84.42 at the open on Monday, trade is off. Rinse and repeat for now. We continue to sell off. New long signals will definitely dry up as my scans are not looking healthy at all. But the perfect speculator scan still has a healthy number of stocks in it. So we'll see how this plays out. I have an open mind. I move and ebb and flow with the market. Whatever the market decides to do, I follow suit. We'll see what happens on Monday. Aloha, everyone.